Good evening, good morning, and good afternoon to all of you. Welcome to this webinar series entitled World Economic Transforms. This is a series we started last spring during the IMF and World Bank meeting to try to project ourselves and to discuss post-COVID-19 and how the global economy will be transformed by looking at different dimensions, of course, global macroeconomics, but also the acceleration of digitalizations and innovation in the field of money and payment. And it was with great pleasure to have the support of Accenture, and thanks here, Usman and all his colleagues for making this series a reality. Today, we are very privileged to welcome Dr. Vachira ARROMDEE from the Bank of Thailand, who is joining us from Bangkok. Welcome and thank you for joining us. Dr. Vachira is currently the Assistant Governor of the Financial Market Operation at the Bank of Thailand. She has been with the bank for almost 20 years now. She serves as the Assistant Governor for the Financial Market Operations Group, responsible for reserve management, foreign exchange administration, and implementation of foreign exchange policy framework, as well as financial market development. The way we would like to introduce and try to put together this webinar is maybe to try to kick off some discussions now about the current policy responses from COVID-19 from the central bank perspective in terms of macroeconomics, what has been the effectiveness of policies and the challenge ahead. Of course, Thailand is relying a lot of tourism, and we saw, unfortunately, that tourism has collapsed all over the world. And of course, after that, we are very pleased to hear from you, particularly on the recent initiative in terms of wholesale central bank digital currencies and your interesting project entitled Project in Thailand, where I think there is a lot of interest among our audience and participants. And Usman will moderate this session. We'll hear from you first, and after we'll kick off from questions and answers. But Vachira, thanks again for joining. It's a great pleasure to having you from Bangkok. And maybe, as I mentioned to you, if you can give us a context so far about the policy response in Thailand with COVID-19, particularly in the face of macroeconomic challenges, and what is so far the situation over there. And from there, we can transit to the discussion, particularly on your interesting initiative on Project in Thailand. I give you the floor from far away, from Paris. Thank you again, please.
Thank you. Thank you. First of all, I say good morning, good afternoon, and then good evening. So thank you very much, and then for giving me opportunity to participate in this event. As you mentioned, the implication of the COVID, as everyone aware, the impact of COVID is a global issue, and this time the problem is started from health issue and then spread to real economy and to financial markets. In the past, the problems usually happen in financial markets. So policy response normally come from the injecting or provide liquidity and then supporting into the financial system. But this time, the problem is everywhere in real economy. So policy response, not just only liquidity, but accommodative monetary policy along with fiscal measures, credit measures, as well as some debt restructuring measures would be vital to support employment and business facility and economic recovery, as well as some supply side policy to support the changing in economic structure. Let me briefly go back a little bit to how health issue will spread to real sector and in financial market. Regarding the containment measures, the state of emergency has come into force since late March. There are some restriction on public movement, mass gathering, and certain economic activities. So the impact is on domestic demand as well as on service side, on the tourism-related sector. Consumer and investor sentiment deteriorate on the back of the sharp economic slowdown and then worsen employment and business prospect. Let me summarize the Bank of Thailand policy response. I divided into three big categories. The first one is a reduction in interest rate. Bank of Thailand is among the first group of central banks to respond to the COVID impact. The Monetary Policy Committee started cutting rate since March from 1% to 0.75%. and another cut in May, and now the policy rate is only 50 basis points. The second policy response is try to maintain orderly function of financial market and financial stability. We introduced a mutual fund liquidity facility to provide liquidity to commercial banks to purchase the money market and daily fixed income unit trust. It's like a unit trust. And then commercial bank can use them as a collateral for Bank of Thailand liquidity support. And the second, we set up a corporate bond stabilization fund to provide bridge financing for high-rated bond that will mature during 2020 and 2021 to make sure that the bond can be rolled over smoothly. This is quite a new role of Bank of Thailand. Normally, we do some liquidity injection through the banking system, but this time we go into the into the bond market because our role, we consider that our role is for the financial stability, and corporate bond sector now is estimated at around 3.6 trillion baht, and then around 20% of GDP. So it's quite large and then quite important. So our financial system is more complex. It's not just only on the banking sector, but on the banking sector and on the capital market also. And the measures on the real economy, what we are most concerned is about the SME. The SME is expected to be one of the most severe impact segment of the economy. And also SME are major contributor to employment, account for around 14 million workers, or around 80% of the domestic workforce. So measures to provide liquidity and credit to SMEs are, we have loan payment holiday for 6 months for all SME, soft loan to support liquidity for SME, and also measures to ensure that financial institutions are able to continue lending, such as loan guarantee scheme and regulatory relief, such as restructuring of the loan term and loan classification, and also relax on liquidity requirements. Looking ahead, there's still a huge uncertainties. How or when could we go back to normal? And when we go back, will it be a back to normal or will it be a new normal? And what business or what sector would be viable post-COVID? This is a big challenge for policymakers. How to allocate limited resource to support business and show up confidence in the short term, which while make sure that it is aligned with the long-term sustainable recovery. I think this is the main focus about the COVID that I would like to share with you.
Great, thank you. Thank you very much. Indeed, this is more or less a same challenging facing advanced countries as a concern about the stop and go in terms of policy forward, and so many uncertainties about the short-term economic prospect as we don't know where we can going to reopen the economy. Why don't now we transit to what I think our audience is also very interested is clearly your project and your initiative, Project Internet. And let me now give the floor to Usman to kick off the discussions and particularly to hear from you. Usman, please.
Thank you very much, Mark. And again, thank you very much, Dr. ARROMDEE, to be here on this webinar. The Bank of Thailand is a leader among central banks when it comes to CBDC, and the project in Thanion is a benchmark project, and I think the extension together with the HKMA on in Thanion Lion Rock has also given us, tremendous insights as to the future, really, of what central bank money can do. And I wanted to take up on the point that you mentioned during your introductory remark, which is about the liquidity injection. And you said, rather than going through the banking system, you directly intervene in the corporate bond market, and you try also to directly support small and medium-sized enterprises. And I think what the crisis has shown us, COVID-19 has shown us, it is the at times ineffectiveness of central bank liquidity to reach all parts of the economy. And in that context, I wanted to ask you, When you think about central bank digital currencies, do you think of it as how central bank money can play a greater role maybe than what it has played traditionally in the economy?
Thank you, Usman, for the questions. First of all, I would like to how can I say? I would like to think that I would like to separate the COVID issue from the central bank digital currency project, because I know that the COVID might help speed up the digital transformation, because after COVID or post-COVID, we'll see more business increase in automation adoption in their production. We'll see more booms in online business and delivery. And even in the financial side, you'll see more online payment and transaction. But COVID is not the cause of central bank digital currency development. I would like to make it a clear statement first. And then you mentioned about the roles of central bank digital currency. So let me about the liquidity and then the roles of it. Let me say that the main purpose of for the central bank digital currency. So let me go back a bit by saying that the digital CBC central bank digital currency is a new form of digital money issued by central bank, right? This is separate from the reserve or the settlement balance that held by commercial banks at the central banks. But this central bank digital currency, there are so many forms, and each will have a different implication for the payment system, for monetary policy transmission, for the structure of financial system, and for financial stabilities. So when you ask me that question, so it's depend on form of the central bank digital currency that we are discussing. The area of which central bank focusing on exploring central bank digital currency, I would like to divide it into categories. The first one is a wholesale one, and the other one is the retail. The choice between these two categories largely depend on the strategy and the financial ecosystem of each country. Some of the country that has a very good payment system, maybe they would like to explore to enhance efficiency, to explore whether this new technology can enhance efficiency of the payment system. Some focus for the financial inclusion, and some focus more because of their society is become cashless society. And for Thailand, we start from exploring the distributed ledger technology to see whether it can help enhancing efficiency on the payment system. And for our Project Intermon, I can say that it is a collaborative project among the Bank of Thailand Central Bank and 8 commercial banks to explore, experiment, and make up a prototype of a wholesale CBDC. The objective is to learn and then to explore how how DLT, distributed ledger technology, can enhance efficiency for a payment system, and how DLT can create a better alternative of payment system. The project, I think our project began in the second half of 2018, and we have 3 phases of the project. The first phase, we start by exploring how central bank digital currency with DLT can improve efficiency by we replicate our real-time gross settlement system, and to learn what process that we need to change according to the design. The role of central bank before as an operator of the payment system, but with the DLT, will the role of the central bank change? How is the role of the central bank change as a validator or as the one who monitor and ready to inject liquidity in the system? And for the second phase, we expand to explore whether the technology can be used to replicate financial products and handle sophisticated functions such as repurchase activity. normally in the interbank market, when central bank doing some lending, sometimes they're not do the clean loan, but they have a repo. Normally we call it repo, repurchase activity. And also we try to experiment how DLT can be used to provide data reconciliation and support some regulation under the current payment process. And for the third phase, of the last phase, we have share our interest with the Hong Kong Monetary Authority to explore cross-border fund transfer use cases. The objective is try to redesign the process by creating what we call corridor network. The corridor will provide a peer-to-peer FX trading with the two countries. And we finished the 3 phase already. And currently now, from the wholesale, we are continue to explore towards a little bit more on the detail, on the retail level. We have made the announcements last month to collaborate, to work with the Siam Cement Group to link central bank digital currency with their blockchain procurement system. Under the scope, we are expected to see how central bank digital currency under corporate hand will enhance their payment efficiency and support their new innovation. And moreover, we also on the way to continue project internal with HKMA on the Lion Drop project. So I think that's a brief of how we have done on the central bank digital currency.
Excellent. If I may drill a little bit further on the Infinite Lion Rock component, the deficiencies in international payments are well recognized, that this is where the scope for improvement is probably greatest. How do you see this in terms of what you think could be the best use cases for CBDC, if you think of retail, wholesale, and international payments? Where do you think the impact of CBDC could be greatest amongst these 3 categories?
We start from wholesale, and wholesale it's a closed loop. It's just only on the interbank market. So when we first start with this, we see that, and then in fact, most central banks start experimenting to use DLT to issue the wholesale CBDC. So we follow their footsteps. And in order to understand how CBDC can improve efficiency in the interbank payment. However, with the current account now are already digitized, so the wholesale CBDC did not deliver much value as we have been taught. But we see that the role has changed, and then at first we think that for this is going to be if it's happened, it's going to be a real infrastructure, because the payment system we consider payment system is an infrastructure, a big infrastructure. That's why we use the word collaboration between central bank and 8 banks, the 8 participant banks, to collaborate and then help design what's going to be, the system going to be look like. And then so we got all the input from the player, both the 8 commercial banks and us, and then to see how it's worked. It's worked quite well, but on the technology side, it's still have some limited about the speed and other things. But I think of all this, technology is one thing, but the most important thing is about the policy, because now this is just only for the wholesale. For the retail that we try to explore, other central banks may also have the same concern, because the introduction of retail CBDC or the other central bank digital currency, what's its mean for the policy implication? I think it's not just only the payment system that will change. The monetary policy transmission, financial structure, the structure of financial system will change. And the most important thing is the financial stability I think these are the 4 functions which are the role of the central bank to not to monitor the role of the responsibility of the central bank. That's why it's a bit how can I say, it's a bit not difficult, it's a bit a hard job to balance between the technology side and then the development side with the responsibility itself for responsibility of the central bank. And then you're talking about the cross-border, it will even be more difficult on the policy side, because some regulation, some central bank, they still have some regulation. Technology is one thing, but policy regulation is other thing that all central bank has to carefully, mindfully thinking about it. What is the implication? How this will have some impact on this kind of ecosystem.
Exactly. And I think in particular when it comes to cross-border, the idea, and I think this was part of the Inthanion Line Rock project, is that you allow non-resident commercial banks to hold effectively CBDC or the digital receipt that you have created. So that is, I think, a true innovation. Typically, of course, only resident central banks are allowed to have access to the central bank's balance sheet, but in this project you allow non-resident to have access, and that seems to be not only a true innovation but offer many more opportunities to provide safe settlement in cross-border transactions. If you think about that, you are expanding effectively the safety of central bank money to non-residents. Could this also make the Thai baht maybe a more attractive currency in international transactions? Would that be fair, that by equipping the Thai baht with this new functionality that CBDC can provide, that it could be used maybe more in international transactions?
I think this let me go back with this is an experiment. This is an experiment, and we try to design. And then when I said that the cross-border between Bank of Thailand and HKMA, Hong Kong Monetary Authority, and then I use some word, a corridor. So this means that this is just only for the central for the commercial banks, not any non-resident, for the commercial banks who participate in this not in this project, in this corridor network. And then if you just trying to drawing the map, this is the wholesale. Both of us use the wholesale CBDC. So it's only in the interbank. And then with this to interbank, there is some section that these two country commercial bank can intersect. So it's just not widely used. As I mentioned, it's all the technical thing you can do, and then in some technical issue we still cannot solve, but we believe that within 1 or 2 or 3 years this technology can be solved. But for the policy and the implication, I think this is what the central bank has to be more carefully concerned, and then be mindful about this. What should we do, and then what can we do? Should we disrupt this thing? And then so it's going to be pro and con in each the way we design this kind of things. And then this is just only one. This is just only one way of the design. When we first designed this, we are very exciting because at first we say that okay, we can eliminate some corresponding bank because we set up corridor platform. So it means that commercial banks, the Thai commercial banks and Hong Kong commercial banks can join in this platform, and then they can do some settlement directly. But in some sense, we forgot that the role of corresponding bank is not just only to be the middleman between these Thai banks and Hong Kong bank. But the role of correspondent bank is also provide some credits to some trust to both banks, especially when there is some credits, and then especially when there is some large payment. So we have to come back and then rethink about this. Who will play this kind of role also? So it's not just only having a corridor and then that's it. But at least I think we learn quite a lot on this kind of things, that if what will happen if we try this way, and then what will happen if we try this way.
Very good. Mark, I'd like to take a step maybe sideways, and you know, with Accenture, we are working with a number of central banks on different projects, and I wanted to ask you a question in relation to Libra. When Libra came or was announced in June of last year, it really changed the debate, and I think induced some more urgency for central banks to think forward and say, oh, what do we need to do against what could be the emergence of these private currencies? How was it for the Bank of Thailand? Was this something that you thought is a serious threat to central banks?
I think part of it, yes. I accept part of it, yes, because how can I say it? For Libra, the platform, the Libra platform is, we know that Facebook or Libra platform is widely used. So what does it mean if lots of people adopting and then widely use of this kind of coin, of stable coin? It might have some threat on the central bank monetary sovereignty, and also ability to conduct some monetary policy and influence the economic effectively. So if it is widely used, I think it will have some implications. So I think maybe this the introduction of Libra maybe how can I say, make like a catalyst for some central banks to start rethinking. On our side, we start from the wholesale, and then I think when the introduction of Libra come, quite a lot of central bank now start and then turn to look at the retail central bank digital currency also. So from the wholesale to the retail CBDC also.
Very good, excellent. Mark, do you want to follow up with a question? I could go on, but I don't mean to dominate it, and I'm also checking the chat if we have some comments from the participants, yeah, and I shall liaise those.
Yes, absolutely. Yeah, let's go to the Q&A. I saw one question coming here that I think directed to Dr. Vachira. You know, they said, you know, that the Bank of Thailand has run the experiment on the wholesale CBDC some time ago, and now have moved the experiment toward more retail use case. So the question here, how much Bank of Thailand believe on DLT blockchain maturity in the future so that it could be implemented in real situation? When do you see Bank of Thailand could implement one or all of the use case on CBDC? 5 years or more than 5 years? That's one of the questions from our guests here.
As I mentioned earlier, on the technology side, I'm not that much concerned, although there's some limitation now about the speed and then the volume of the transaction that they can make through the DLT. Of course, for the decentralized and the centralized is more efficient than the decentralized, but there are some pros and cons. But as I already discussed with Osmund, that the issue is about the policy, the implication of the policy implication. How will this affect, how will this impact monetary policy transmission? how will this impact the payment landscape? And then how will this impact the financial systems, the structure of the financial system, as well as the financial stability? So I think all these issues that the central bank have to rethink and then resolve, and then be mindful about this kind of thing before start adopting the real CBDC. What the Bank of Thailand stand is, we try to be ready. We try to understand and be ready as much as we can if the times come, and then we don't want to be far behind. If something happened and then everybody change to the news, if this new technology become adopted, widely adopted, so we can go ahead with them.
Mm-hmm. We have another follow-up question actually on the retail side. Is there a project for retail like you have done for wholesale? Or is this, do you take a different approach for looking into retail CBDC?
For us, once we finish the wholesale, now instead of going directly to the retail, as some other central bank, we just announce that we will cooperate with the corporate sector. So it means that from the wholesale, and we try to explore whether how corporate needs with the CBDC, what will it be look like? And then I think that that will be a big step before we are going to the retail, the real retail one.
I see. As you know, Accenture is supporting the Central Bank of Sweden in the implementation of a retail CBDC, and very specific circumstances in Sweden, which is basically the disappearance of cash. Something quite extraordinary. Young people may have never seen a banknote actually in Sweden. It's something that is hard to imagine, but something where many say, look, it's going to happen. Here in the UK as well, there is an assumption that it is only 4 or 5 years behind Sweden when it comes to the use of cash. COVID has also accelerated that, the disuse of cash. The question though is there really a role for digital central bank money in retail? Because the fact is, like you see in Sweden, the general public seems to rely entirely on bank transactions with a debit card and other instruments. Do you see a role for central bank digital currencies for retail transactions?
Maybe. In fact, as I mentioned, in the case of Thailand, we also promote the technology, especially on the digital technology also, and then on our payment side, we have 2 years ago we promote prompt pay. Prompt pay is a fast retail transfer, fast payment for the retail transfer, and the other one we promote the standardized of the QR code, and then this if we see the volume of the retail transaction has jumped. I think it's around 16. I cannot remember. 16 million transaction per day within 2 years. It's jumped quite a lot also. So it means that the adoption, the likelihood of the adoption of the new technology is very fast in Thailand. And if the retail CBDC is introduced, I think even at the trial size, the consumer or the people experience, I don't think we'll see much of the difference between the prompt pay or the retail payment transfer and the retail CBDC at the first stage. But later on, if the adoption of the technology, especially as all you know that on the blockchain or the DLT, there are some more features that can provide for example, smart contract. So it's going to be more complicated later. But if the CBDC were introduced, I think the adoption will become very fast. So there's some role, but it's come back to the question of the policy implementation. What is the role, and then how do we decide this? For example, if we are talking about the Sweden one, and then on the China front also, if we limited and then make this the retail CBDC just only the M0, so it's will replicate, or it will replace the cash. So everything will be the same. So it's so the answer is the retail CBDC. It's depend on the design, as I mentioned in the very first, that the type and the form of CBDC. There are many type and form of CBDC, and then this will have some impact on the payment system. It will have an impact on other things, and it also depends on the ecosystem, and then how will the policy would like to see, how the policymaker would like to see this.
Very good. You mentioned China, and of course China is one of the most advanced countries when it comes to a possible adoption of CBDC. There's a trial run already for retail CBDC in a number of locations. What does it mean for the more or less immediate periphery of China, for Thailand? Is this also does this also give additional incentives to say, look, we want to be ready when and if China is proposing a new digital infrastructure, that we can actively participate, take advantage of that? Is that an impulse for the region as a whole? China's movement?
As I mentioned earlier, that the strategy for the exploring CBDC of each country depend on the strategic objective, and it also depend on the financial ecosystem. But in the case of the digital yuan, as somebody has mentioned, this maybe expedite the interest of some other central bank who started from the wholesale, and they just to have a look at what's happen if we, or what's going to be the policy implication, or what will be the impact if the retail CBDC will be adopted. So that it's like expediting the thought about this kind of thing also.
Yes, absolutely. Mark, do you have another question or a comment? I'm browsing here through the.
Yeah, I see one maybe technical question that is coming related to XRP. Is the Bank of Thailand using Ripple XRP ledger for cross-border payment?
No. We use the R3, so it's Corda.
Yeah, Corda.
Yeah.
Yes.
Right. And I mean, the fact is, it's quite likely that there will be, of course, different DAT platforms in the world. It's unlikely that one will completely dominate or will be a monopolist. And it's more likely that we'll see the coexistence of different DAT networks. So one of the concerns is, how will these different DAT networks communicate with one another? The interoperability between the different DATs that exist. How do you see that? Because I can see this being an obstacle to adoption. If central banks feel, I don't want to be too close to a single technology provider, I would prefer if there is sort of an open standard for interoperability. Is this something you're looking as well to achieve through your projects? This look at not only what works on a given platform, say R3 Corda, or what works across platforms?
Yes, I think as you mentioned, interoperable. It's difficult to pronounce it. Interoperability is a key issue also, and then that's why in the next project that we have done, our CBDC, and then we try to connect it. I don't want to use the word interoperate again. To connect it with others platform. We try to design some platform and then have the corporate sector that we try to, the project that we have done, the Siam Cement group will use some others technology, and then we try to see how it connects, and then so if we have some common platform, and then each other's platform can interop with our platform. So that will be the design that we plan to do.
Interesting. We have one question here to a point that you mentioned earlier, financial inclusion, which in emerging markets, the but CBDC, retail CBDC, is often seen in light of could central banks assume a special role to facilitate the availability of central bank money for the general public, in particular where there is a large proportion of the population that is unbanked. How do you see that? That is not normally the role of a central bank, but it is possible that CBDC could become a vehicle to facilitate financial inclusion, reaching those that are not connected to the formal banking system. Is this something that you think could be of importance to the Bank of Thailand?
Oh, I think for the Bank of Thailand, for Thailand case, I think our payment system is quite very efficient, and then I don't think that we have that much of the financial inclusion issue. Mm-hmm. So when we start exploring how we use the CBDC, how we the technology for the CBDC, that's why we start with the wholesale things. The financial inclusion is not the main objective, but so that's why we say that let's see whether this distributed ledger technology can help us enhance the payment system. And then what will happen? And then what will be happen, or what is our role if we using the DLT technology? It means that the central bank as an operator in the payment system, because bank one and then bank B, bank A and bank B, when they do the settlement, it has to pass the operator of the central bank. But so what is the role if we use the distributed ledger? It means that the role to be an operator will disappear. So what does it mean for us? What does it mean for the central bank from the operator to be the validator, the one who just maybe just monitor and then validate all the transaction in the payment system? So this kind of thing that we learn from using technology. But at the end, I think the technology is one thing, and then which technology that the central bank will adopt still be not a clear answer yet, whether it's going to be distributed technology or will it be the centralized technology. I think these are still be the debate among central bank also, because some say that the centralized have some more efficient, but of course there are some positive and negative compared to the other distributed things or these intermediate, these centralized things.
Indeed. And I think in our discussion as well, we are trying to sort of look what is the new functionality that say a DLT platform can provide that, say, the conventional approach, like an account-based system, can actually not provide. So I think it's very much increasing the utility of central bank money, allowing central bank money to do more than what it can do today. That is driving a lot of the debates that we are having. It's about efficiency gains, but it's also doing new things. And here, I have to say the innovation, I see the innovation in particular in the adoption of tokenized central bank money as compared to an accounts-based approach.
But as I mentioned, I think for the technologies, the central bank money can do more things, as you mentioned, but also it's come up with implication also. What does it mean when do more things? So it means that some function of the other players in the system will disappear. So what is their role? So are we still need that function? Do we still need that function, or do we still need these intermediaries to be part of the system?
That's true. But I think the changes to the financial system, they are numerous. You have the non-banks that provide increasingly financial services. You have the shadow banking system that for some time has already undermined the traditional banking system. So these changes have been going on for quite some time. I think one of the interesting questions is to what extent can CBDC be a catalyst for financial innovation to bring the desired objectives of greater stability, maybe financial deepening. You mentioned the small and medium-sized enterprises. To the extent that CBDC would be more accessible, it could lower transaction costs, build confidence, and allow smaller players to participate in the capital market, something that is difficult to do today. Because the traditional banking system, of course, represents also a bottleneck to some extent.
I think I agree with you that the financial landscape will not be the same. Will not be the same. Even now, the financial landscape from today compared to last 2 or 3 years, there's quite a lot of change. And then I think in the financial people are the first or the easily to accept the new technology, and then we see some changing quite a lot, but it's gradually changing. But maybe you're right that DLT can, I don't know whether it can disrupt and then the whole financial landscape. So we have to see. But as I mentioned earlier, so we have to see how the speed of the disruption in the financial landscape. So we'll see.
Of course.
I have, if I may, maybe last question that will shift a little from digital to more macro, in a sense that a lot during this episode of COVID-19, we saw that policymakers in emerging markets, particularly around the world, were acting more aggressively in terms of monetary policy and fiscal policy. Do you think the fact that there is a new era of policymaking in emerging markets because they have more credibility, because they build buffers like foreign exchange, reserve, macroprudential tools, do you see a new era in emerging countries? Or are you concerned maybe that we can go back to more episode of capital outflow and that what we saw as an economic crisis can morph into a financial crisis? Or you believe that here most policymakers in emerging countries have the buffers and have the tools to respond to any type of outflow?
I think, as I mentioned earlier, that this time the crisis is not the same. So for policymakers, only monetary policy or the fiscal measures will not be, will not be sufficient. Accommodative monetary policy, fiscal measures, and then I also use the word credit measures, and even the debt restructuring, because after COVID, there are some sectors or there are some business that might not be viable after COVID, because after COVID things will change quite a lot also. The adoption of the automation has come. So maybe people will think that, oh, we do not need this kind of this huge employment, we can use automate. So quite a lot of things will change. Or even in the case of Thailand, in our case, the tourist industry is quite a big sector in Thailand. But with this kind of thing, there's quite a big impact on the service sector, on the hotel, on the tourists, and then so other related sector. So there should be some policies, monetary policy, fiscal measures, credit measures, debt restructuring measures, as well as some, we need to think about some supply side measures to restructuring the economics, or the economic restructuring also, because things will change. So to conclude, the answer is that yes, there will be more rooms for policies to respond for this kind of the problems. You mentioned one thing about emerging market. This time, if you look at some number, you see that on the development, on the developed market, on the DM sides, quite a lot of fiscal and monetary policy. So it's mean that in some case, the liquidity and then the debt, the government debt will explode quite a lot. So I'm not quite sure whether this will have some implication or some impact spread to the emerging market or not. And if you can remember on the last crisis, when the developed market countries expand or inject quite a lot of liquidity, there is some implication and then some spread to the emerging market also, some pressures to the emerging market also.
I can see that the debt built up that has been repeatedly a problem to become indeed even more of a challenge now, that we see this very rapid expansion of debt in the advanced economies, in large part because they can do it, and while the emerging markets are more constrained in expanding sort of their indebtedness. And that could lead to an even greater asymmetry in the relative perception of advanced economies and emerging markets, but it could also be to the advantage of emerging markets, I suppose, to some extent. If they are after the crisis, if they look fiscally more sound, much more sound than many of the advanced economies.
Might be, because some emerging market are have some more strong fundamental.
Indeed.
Good. I think it's time to conclude, Usman. Dr. Vachira, thanks so much again for joining us. I think for this very interesting conversation, discussions, particularly on your current initiative on wholesale CBDC. Usman, thanks so much for moderating that part of the discussions. We will continue our series. In 2 weeks, we usually organize an event with the Central Bank of Peru in Cusco. This year, it will be on a digital format, but we will, of course, reassess and rethink about the discussion we have today in terms of capital flow, macro, what's been happening in emerging market. And also the discussions on CBDC will continue, particularly the discussion on financial inclusion, which I believe is a very important part of this conversation. Dr. Vachira, thanks so much for being with us. I know it's quite late in Bangkok, so it's a great pleasure. And we look forward to our next part of our conversations with other central banks. Again, thanks for everyone, and we look forward to seeing you again. Thank you. Bye.
Thank you very much. Thank you, Vachira.
Thanks. Thank you.
Thank you, Mark, for organizing.
Bye. Thank you.
Bye-bye.
Bye.
Bye-bye.
Bye.